Imagine waking up one morning and hearing on the news that the banks have closed. You immediately reach for your phone to check your account, but the app won't open. You go to the ATM down the street, and there is a piece of paper on it, out of order. The stores are open, but no one is accepting bank cards. The gas station wants cash only. Rent is due, but your landlord does not want a bank transfer. At first, you think it is just a temporary problem. You tell yourself, it'll be fixed soon. But then you look around and realize the situation is different. People are lined up in front of closed bank branches. Shopping carts in the markets are filled to the top. Everyone is trying to pay with the crumpled cash they have because the cards are not working. On television, one sentence keeps repeating, "The financial system is under review." And in that moment, a strange feeling sinks in. Your money was not where you thought it was. The money in your account was not something tangible waiting to be withdrawn. It was only numbers sitting on a screen. And now that screen has gone dark. It may sound like a scene from a movie, but it is not. It has happened before. And not only in distant or troubled countries, but also in countries that seemed modern, strong, and secure. And when times like this come, life does not quietly pause. It changes all at once. People's understanding of money, security, and survival becomes something completely different overnight. Argentina, 2001. After years of poor economic management, rising debt, and one IMF bailout after another, the government had very few options left. People were trying to convert their pesos into dollars and move their savings abroad. Money was being withdrawn from the banks at a rapid pace. In the end, the government froze the system. They called it corralito, meaning small corral. But for ordinary Argentinians, it was basically a trap. People were allowed to withdraw only 250 pesos per week. Dollar accounts were forcibly converted into pesos that were losing value. In just a few weeks, the money people had spent years saving for a home, a business, or retirement lost half of its value. People took to the streets banging pots and pans in protest. Even middle-class families who thought they were secure suddenly found themselves in deep uncertainty. This is what happens when banks shut down. Money does not disappear only on paper. Access to bread, milk, and rent can become difficult overnight. The stability people spent years building can be shaken in an instant. Cyprus, 2013. The European Union prepared a bailout package, but in return, bank deposits were frozen. Accounts holding more than 100,000 euros were subject to cuts. Citizens' money was used to rescue failing banks. The people who felt it the most were not billionaires. They were small business owners who could not pay their employees. They were elderly people who could not access their pensions. They were parents who could not pay their children's school tuition. Lebanon, 2019. After years of corruption and economic collapse, banks limited withdrawals to just a few $100s per month. It no longer mattered how much money you had in your account, because you could not access it. People were no longer going into bank branches with paperwork. They were going in with desperation and anger. In every example, the story was the same. The money you thought was yours was never fully yours. Even in the United States, the country people said this could never happen here. Banks were shut down. In 1933, during the darkest days of the Great Depression, President Franklin Roosevelt declared a nationwide bank holiday. For 4 days, every bank in the country closed its doors. People could not withdraw their money. Businesses could not pay their employees. A deep sense of uncertainty spread everywhere. Later, the government inspected the banks one by one and reopened the ones that were sound. Only then did confidence begin to slowly return. Just think about it. Even one of the richest countries in the world had to temporarily stop its entire banking system in order to save it. Banks do not hold your money the way most people think they do. The system is built on a structure called fractional reserve banking. Only a small portion of every $1 deposited is actually kept on hand. The rest of the money is lent out as credit, directed into investments, or begins circulating inside other debts. The problem is that when too many people want their money back at the same time, the system's fragility is exposed. That is when the structure begins to shake, and governments often choose to protect the banks instead of openly admitting that weakness. They limit withdrawals. They reduce the value of deposits. In the end, ordinary people pay the price for the system's mistakes. Do you have enough cash for 1 week? What about 1 month? If the problem is with the banks, would you still be able to make your mortgage or loan payments? If the numbers on the screen disappeared one day, would you be able to provide for your family? This is not paranoia. It is simply facing an uncomfortable truth. The financial system was not built to protect you. It was built first to protect itself. And when things truly get tight, you begin to see this clearly. Banks are not secure vaults the way many imagine, but fragile structures that run on trust. When that trust is shaken, both money and power begin to flow in directions you cannot control. From Argentina to Cyprus, from Lebanon to America, history keeps telling us the same thing. Do not confuse access with ownership. If your money only exists as long as institutions allow you to use it, then it is not fully yours. Real financial freedom is owning something you can still reach when the system begins to stumble. Because one day the question may not be, what if the banks close tomorrow? It may become, what am I supposed to do now? Because they have already closed.